If bears didn't love the market here at 443, they're going to love it at 480.
Sorry.
Hey, what's going on, guys? Welcome back to Way Up Trading. Now, today I want to go over the move that we saw on the SPY today and the overall market. Absolutely crazy. Went from lows of somewhere around the 436 mark and running all the way up to my target that we had set several weeks ago at the 443 on the nose. 443.52 is the mark I have been calling out for quite a while after our last pattern, and we actually closed right above it or right below it after touching a high of around 443 and 82 cents. Couldn't ask for anything more. Absolutely perfect. Fantastic day trading the markets. Congratulations to everyone that's caught plays this week and has been paying attention to what's been happening. Salute to you guys, definitely. I want to go back over the charts to see how things played out, what I'm expecting going forward for the next couple of days, and when this run can possibly end. We're going into the last day of the OPEX expiration date, June 16th. Huge day. Should start off really crazy in the morning. We should see a lot of volatility still happening throughout the day. But we're going to go over all of that and more right after this.
Squeeze every penny. Squeeze every penny.
I'm squeezing it.
All right, I got the SPY pulled up here on the 15-minute chart. We're just going to go over what happened today, get an idea of how things played out after the Fed rate hike pause that took place yesterday at the FOMC meeting. Things actually went for the downside real quickly, but we were able to catch a move yesterday that actually brought us right back to up where we needed to be. It was definitely necessary in order for things to cool off. You can see we started off yesterday roughly about the 435 mark and actually worked our way all the way up to about the 438 mark before the FOMC took place, all stemming off of what took place with CPI data that came in earlier in the week. And then from there, once the FOMC news came in on the rate hike decision, it just completely tanked down. But it was a complete bounce off of the 800 moving average, which I had posted on Twitter. Basically bounced off and was able to catch a 0 DTE move, expecting the news that came in for the rate hike pause that I mentioned previously. And that would actually be a bullish catalyst to send the SPY upwards. And that's exactly what it did after a quick distribution and a recovery with tons of volume that came in to press the price back up. We had this 921 cross on the 15-minute to the downside after the news, caught support, made some higher lows in this area here, and then from there had been on an uptrend up until the morning. We noticed there was a little bit of a rejection in the morning hours. We had a little bit of a downside cross early on when the SPY was down roughly about 0.30%, 0.31% early morning. Before starting to take shape early on. A great opportunity to get in. You saw there was a reaccumulation pattern that was setting up here after bouncing off of the trend that we've been in, which is once again our favorite pattern here, the broadening top pattern, which is again the A, B, C, D took place, and then E was basically the move all the way up. Bouncing, never even found the partial decline. I barely even found a partial decline before breaking out, retesting the top of this wedge, and then running all the way up to our target that we had set here at 443.52. Actually going and breaking it and hitting a high roughly about 443.86 before coming back down and retracing to where we are now. So just about the 21 EMA on the 15-minute time frame. This is a huge move that took place in the SPY today. People laid a lot of money on this thing. If you were involved, you were able to hold calls with us. We entered these calls very early on in the week, 440, after getting the news on the FOMC, even though we had been calling this move since about the 420, 427 range. And that's exactly what took place today. It's kind of amazing to see it come to fruition after just looking at the charts and understanding how this thing moves. And, you know, couldn't be prouder. Congratulations to you if you caught any of that move today and were able to make some profits on the way up here. But it was a beautiful, beautiful day overall. I mean, this is a massive changeover here. From the 436.24 mark and just skyrocketing after we get that 921 cross, retest and go. Going forward here, I actually can see that this may possibly retrace going into tomorrow, retesting the top of this broadening top pattern once again, roughly about the 440.50 mark, finding some consolidation there because now we're pretty much out of catalyst at that moment, besides what is still left to go with OPEX. Now the OPEX date is still going on into tomorrow, June 16th. I do see a potential for a lot of volatility in the morning on some shorted names, some heavily shorted names, as well as some of the blue chips that have been shorted up to this point. We had some higher highs that we're seeing on some of the blue chips, or all-time highs actually hit between Apple, Microsoft, Nvidia continued to push. Tesla took a little bit of a breather today, but it did come back, bounce up again, and is now consolidating about the 250s range, low 250s. But I do still expect Tesla to start to pick up steam going into the next couple of days, or possibly into the early portion of next week with the OPEX lingering effect on what's going to happen with the short covering movement. So as I mentioned before, 440.50, 440, 41, again, the top of this range here would be pretty much a retest and then a move up a little bit higher back into this range, more like a reaccumulation style before breaking 443. I still believe there's still more upside here to hit this target of roughly about 445 after the dump off in the morning. So we got to keep a lookout on that. Just be careful with any types of downside plays because the market is still in bullish territory. And right now, bears are getting smoked left and right.
Someone been smoking?
So be careful if you're playing the short side. Get in, get out. If you're holding shares, it may be a good time to consider covered calls. But again, in and out on shares of your stocks. You know, hedge it on both directions and be careful how you're actually going to play in this market because right now the market is heading toward the upside. Bears love the market here at 443. They're going to love it at 480. Now 480 is actually the target that I'm starting to see here on the SPY. Starting to develop here after the last couple of movements. A lot of my chart patterns are actually starting to change to the upside and actually showing me a new pattern that's developing here. One of our bullish shark patterns, which is probably one of the more rare and more powerful actual patterns with most of the stocks. And that's what's actually starting to take place on the daily chart here. And I drew it up just to give us an idea of how things have been moving. I mean, over the last couple of days, this next move, this C to D move can actually continue on. This is actually based upon the move to the downside after retesting back in around November 2022. We've just been bouncing around. We crossed over the smooth moving average and got a 921 cross, believe it or not, in the early parts of March and played this pattern again, this broadening top that we've been talking about for quite some time. 921 crosses happened on the daily chart since that time frame, and we've been playing the top of the 9 EMA the entire way. So right now my upside targets to go 444.97, which is that 445 mark I just mentioned a few minutes ago. After we cross that, our next target, if we can hold and consolidate, if we do start to see any kind of holding and some consolidation in the area, you can bet the next step up is going to be at 457.96. My next target at 457.96. If that does break and we go continue, if AI continues to be leading the way as far as what's happening with Nvidia, the chip sector, the blue chips, tech stocks, the short covering rallies going to continue. We're going to start to head towards those higher and higher numbers, possibly looking at a potential double top on the SPY. So we need to be very careful of that. I mean, we have a long ways to go for it, but right now the market says bullish. Looking at the volume profile, this is on the daily chart now. This volume is now in a harmonic mode. Every single day has now moved up in volume positively. Every single day is a stair stepping up positively for the last week. You can see even further back, the green bars pretty much picking up steam. The red bars on the daily chart falling down by the wayside. So you can see positive volume is on our side, and this is looking like we're in a full-fledged bull market setup. Overall, VIX is on its way down. VIX is continuing to press down. This is the daily chart. Made a slight move up, but has bounced off the 9 EMA and is starting to make its way down. Had a level of support here about 14.18, and it did have a little bit of a move. However, this is based on the short covering, but I do believe this thing is going to come down to a new low in just a little bit as the market starts to progress higher towards the marks that I talked about, the 445, 457, and then finally the 470 mark at the top end. What's even crazier is that from a momentum perspective, looking at this on the weekly chart, I'm calling 470 right now. It's still a possibility to get to 470. I think that's going to be the double top. I still know that there's a macroeconomic setup that we got, macroeconomic issues we have going on. Whether or not it's here, China, the rest of the world, Europe, so on and so forth, there is a chance that this thing can actually touch 480. This is the weekly chart. You can see the volume here is still all green and continuing to push, and a couple days of downward consolidation, obviously, before starting to push higher with what happened earlier on this week. However, in the last 2 weeks, I should say, however, it is stair stepping up, and it's a very high possibility that we can still push through these levels, believe it or not. So we're going to keep an eye on the SPY. We're going to play the chart like we got it. We're not going to play anything outside of what we have in front of us. We don't want to be too skeptical right now. That's how you lose money, and that's not what we're in the game of. We're making sure that everybody has their outcome be income for 2023. If you like content like this, comment, subscribe, hit the like button. Join us on the way up. We're going to be here every single day, growing our portfolios together, making that outcome income. Catch you on the next video. Peace.